Hi, and welcome to Market Conversations. Just want to do a quick video on Alibaba. This stock has been taking a beating every single day for the past couple of years now. And we just don't know where the bottom is. Some people are saying this is the bottom, around 130. But because of the new COVID variants and because Didi might get delisted, it has a negative effect on a company like Alibaba. So we just don't know if this is the bottom. But one way to protect your portfolio is to hedge it by buying puts, by buying put debit spread, which costs less than buying long puts. But before I continue on with that, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. I also have a Discord Patreon that I'm trying to grow. So if you guys are interested in sharing ideas, come check it out. I know a lot of people have lost a great amount of money on this stock, myself included. You know, we all said that 250 was a good buy. 200 was a good buy, 180, 150, and now it is at 130. We'll take a look at a 4-year weekly chart. This stock has not gone anywhere at all. We did see a high of 319. This is last year. Ever since then, it is now down to the support level that we had back in 2019, almost the same month too. So this is acting as a very critical support, because if this support doesn't hold, it can get very ugly. So back in 2016, it was trading around 57.20. So the people that got in back here actually made money, but the people that have got in 2017 have not. They have just broken even right now. Take a look at a monthly chart now. We can see that it did try to break above the 180 resistance, but couldn't. And then last week we had an earnings report. It wasn't good. It went to a high of 168 November 17th, and then it dropped to a low of 141. And then after that, we saw a massive sell-off, even hitting a low of 131.22 on November 24th. It's definitely a lot of uncertainty, a lot of fear with this company, with a lot of Chinese stocks. We have this coming out. China asked Didi to delist from US on security fears. Well, this doesn't look good for all the other Chinese companies. If they get delisted, that's just going to create more fear, more sell-offs. We have a lot of downgrades. So, for example, Needham analyst Vincent Yu maintaining buy rating on Alibaba shares, but reduced the price target from $330 to $230. This is what he said. Alibaba reported a rare miss plus guide down for its September quarter, with both top and bottom line trailing expectations and revenue growth guidance lower from 20% to 23% from 29.7% growth announced in May. Growth at core commerce and customer management revenue slowed on weak macro and intensified competition, the analyst said. Margins, meanwhile, were hurt by spending on merchant support and the permanent waiver of certain merchant services fee. Cloud growth was better than expected. User growth also came in strong at 62 million in net adds for the quarter. The annual active user growth and order growth were not translated to revenue growth due to promotions. The large number of new users in lower tier regions are dragging down the platform ARPU. Needham lowered its December quarter China commerce revenue by 13%. And total revenue by 9%. Another article, it says Alibaba stock is near 3-year lows, why one analyst prefers its competitor. A team of strategists At Swiss Bank, UBS predict that with the latest regulatory crackdown now outlasting prior episodes, the Chinese tech sector is probably past the worst. They say the market is pricing in a lot of negatives and there may be an overcorrection at hand. They stated, among our e-commerce coverage, we prefer JD over Alibaba as there is more clarity on the long-term margin improvement at JD versus the level of margin decline for the next few years at Alibaba. Since we don't know where the bottom is, what we want to do is possibly hedge our position, especially if we're holding a lot of shares, even a lot of call options. If we were to look at the January 2022 expiration dates and we go to the 100 strike price, right now we are looking at $210 for one option. Let's take a look at the volume. We had 1,000 volume and 35,000 open interest. A lot of people are expecting this to go down to 100 or lower. So what we want to do is just possibly buy some of these, or we can buy put debit spreads. It's almost like buying a long put, but our max profit is limited. So what we're going to do is we're going to buy the 110 and then sell the 100. We're looking at $129 versus the $210 that we saw. And we can make a max profit of $871 if the stock goes to 100 or below on January 21. We can go further out in expiration dates, and that's what I'm considering right now, to March, and doing the same thing. Buying the 110 and then selling the 100, we're looking at $205 versus $425 from one long put. And same thing, we can make a max profit at $795. So I'm thinking about just getting 5 of these, pay $1,000 to make a potential max profit of almost $4,000 in case there is more downside to Alibaba. Because like I said, we don't know where the bottom is. We don't know where the short term is going to go. But long term, I am very bullish on Alibaba. I do feel that things will eventually get back to normal, hopefully. But right now, there's just so much risk, a lot of government risk, COVID variants. It's just not going well. The year is almost over. People are going to sell off their losing stocks. So in the meantime, why not just hedge a little bit? Let me know in the comments down below what you're planning to do with Alibaba. Are you holding strong? Are you buying the dip? Or are you done with this stock? Let me know in the comments down below, and I hope to see you guys in the Discord.